Welcome back to the channel, everyone. Today we are once again talking about the One Big Beautiful Bill and tracking its confusing and messy journey through the legislative process in these United States of America. If you want some background on how we got to today and some pain points, be sure to check out my previous two videos, both linked in the description below. Be sure to subscribe for more tax talkers and stay tuned for the end, where I'll go through some of the key points of tax legislation and where they are in the latest version of the Senate bill. We left off following the Senate parliamentarian carving out some parts of the bill that did not pass muster with the Byrd Rule, meaning they were not compliant with the budgetary reconciliation process. This is the process Republicans are using to get around the filibuster rule in the Senate. So following that carve out, Republicans scrambled, rewrote, mainly just left these things out of the bill, and a new bill was introduced. And on Saturday, we saw a mad dash to get a vote, and this was a vote just to open debates on the bill. And that did get through 51-49 with two Republican no votes late Saturday night, and so that opened the bill. From there, we saw some typical delay tactics. Republicans had to read the bill aloud, all 900 some pages of it. Then it went to floor debate. I think this was around 15 to 20 hours. I've seen different recaps of that. From there, it goes to vote-a-rama on amendments to the bill, and this amendment process went late into Monday evening. That brought us to the morning of today. I'm filming on the evening of July 1st, and this morning, the bill did pass the Senate with 50 Republican votes and J.D. Vance supplying the tiebreaker vote. Now it will head back to the House of Representatives, where Speaker Mike Johnson once again needs to deliver a majority. It all started in the House over a month ago when the House of Representatives voted 215 to 214 to pass the original version of the bill. But because this is a budget reconciliation bill, it needs to be passed letter for letter by both chambers of Congress. So if the House ends up making any changes in order to get to their majority, it would have to go back to the Senate. And we'd just keep doing this until they both pass the exact same bill. So is this thing going to pass? I would say it definitely seems likely. If you look at online prediction markets like Polymarket, they have this now up to I think I saw it about a 2/3 chance to get done by July 5th and over 90% to get done by the end of July. So it is certainly expected, though, of course, 30% things and 10% things happen all the time. As we've discussed before, though, it will not take much of a defection in the House of Representatives. Republicans can afford to lose 2 to 3 votes. They need an outright majority. There's no tiebreaker vote. And that vote total at most would be 218 if you have 217 no votes. As we saw when they passed it the first time around in May, they needed 215 because of a few votes voted present instead of no. We expect the two main pain points are the same they've always been, starting with the SALT cap. That is the deduction for state and local taxes. The Senate's come a long way, though. They've put this at $40,000, which is what the House passed in May. However, the Senate has only made this temporary. It would sunset back to $10,000 at the end of 2029. Some House Republicans in May did say this was a red line for them, that this needed to be permanent. That's a definite area to keep an eye on. The other likely sticking point is the deficit. Now, how much is this going to cost? What's it add to the debt? All that good stuff. And here it gets a lot more complicated. There's a whole lot of numbers being thrown around. The Joint Committee on Taxation released its number, which was a $4.5 trillion decrease in government revenues. This was worse than expected. It really kicked off the high drama we saw over the weekend, where it took all hands on deck from Republican leadership to muscle the thing through the Senate. Also lurking over this whole thing is the Byrd Rule. Remember, Republicans are attempting to pass this using the budgetary process, meaning it has to comply with certain rules. And included in that is that the bill cannot increase the deficit after 10 years. What does that mean? It means that in 2036, this bill must be revenue neutral. neutral. Keep in mind, it's actually the CBO, the Congressional Budget Office, which will be the final score, the final arbiter on this. The $4.5 trillion number by the Joint Tax Committee is not going to be decisive. That does not mean that it's adding that to the deficit after 10 years. The CBO number has to say it's revenue neutral in 2036. That's what will ultimately matter. And we won't actually get that number until the thing's passed. But GOP leaders are certainly working off of behind the scenes figures, basically a soft CBO number. There's just really no way the Senate would have gone through all that effort to pass the bill if they did not have data behind the scenes that they would be CBO compliant. So that's not to say that at the end of the day, when the parliamentarian verifies this thing once again, that you couldn't have an issue, but it's just to say it's highly unlikely. At this point, the deficit debates you hear are political, not procedural. And if the bill ends up falling apart because of the deficit, it would be because of the political pressure creates no votes among Republicans, not some procedural catch. In order to be compliant with the Byrd Rule and to have a budget neutral CBO score after the 10th year, it all comes down to these various tax provisions. So let's get the latest on where those are at. The tax rates that changed following the Tax Cuts and Jobs Act, broadly speaking, they were lower. There were changes to brackets and also just rates overall were decreased. Those decreases would be made permanent. As already discussed, the SALT cap goes to $40,000 with high-income phase-outs at $500,000, but this would sunset at the end of 2029. Child tax credit, you have a non-refundable amount of $2,200 and refundable portion of $1,400. I think both effective for 2025. Index for inflation with high-income phase-outs. The QBI deduction is going to stay at 20% and be made permanent. They are going to have some changes on how the SSTB phase-outs go. SSTBs will still be eligible for the deduction at certain income limits. To see bonus depreciation made permanent, we'd have full expensing, automatic expensing of domestic R&D expense. Also, for those taxpayers that were stuck capitalizing it the last couple of years, for small business taxpayers under the 31 million in gross receipts, they will be able to take the remaining part that's capitalized and deduct it. It looks like in 25 is what I'm seeing, though I'm not completely clear on that. So that's all we have for today, folks. Of course, nothing is final yet, and we'll still be sorting through details for months to come. If you like this video, be sure to leave a comment and subscribe to the channel for more Tax Talker updates.